Everywhere you look, India is just sprinting into the age of AI. We've got chatbots booking our rides, AI helping out on farms. It's everywhere. And yet, when it comes to our money, to things like lending, payments, and credit, the entire financial sector seems to be tapping the brakes. So what's the deal? Why is the one industry that could gain the most from this moving so carefully?
Right, let's get into it. This is the big question we're tackling today. Why is there this huge gap between all the AI hype we hear about and the reality on the ground in Indian finance? It turns out the answer isn't simple. It's a really complex mix of tech, regulations, and, let's be honest, a healthy dose of human caution.
So here's our game plan. First, we're going to look at this paradox and talk about the small-scale pilots that are already happening. Then, we'll dig into the 5 big barriers that are really holding things back. After that, we'll check out the small wins that give us a peek into the future, and finally, we'll talk about what it's going to take to really unlock AI in the world of finance.
And that really brings us to what feels like a tale of two Indias. On one side, you have this nation just grabbing new technology at an incredible pace. But on the other side, you have the financial system, the very engine of the economy, which, by its very nature, has to be slow, methodical, and super careful. And that's where you find the real tension.
Okay, so what is AI actually doing in finance right now? Well, it's not like it's completely missing in action, but what we're seeing are small-scale tests, or pilots, not these massive system-wide power-ups. Think of them as controlled experiments, not a full-blown revolution. Not yet, anyway.
So, where's the action? Well, banks and fintechs are definitely using AI for things like customer service chatbots and automating that whole Know Your Customer, or KYC, process. It's also getting pretty good at fraud detection and giving you personalized offers. We're even seeing some major pilots, like NPCI and Razorpay, teaming up with OpenAI to let AI agents handle UPI transactions in a secure bubble. This conversation is real, and it goes all the way to the top. Even the Reserve Bank of India has a committee looking into responsible AI.
So you might be thinking, okay, if these little pilots are working, why not just roll them out everywhere? Well, here's the thing. Running a pilot is one thing. It's easy, it's controlled, and the risk is low. But replacing a core, system-wide function, that is a completely different ballgame. That's where you get into systemic risk and massive legal liability. You can't just, flip a switch.
Because at the end of the day, finance isn't a social media app. It's not a recommendation engine. It's not a toy. This entire system runs on technology that's sometimes decades old. It's governed by incredibly strict rules, and most importantly, it's dealing with real people's money. The stakes just could not be any higher.
All right, so let's get to the heart of it. What are the 5 big barriers that are slowing down this AI adoption in finance? If you can understand these obstacles, you'll really see the full picture. Here they are, the 5 key barriers we're going to walk through. First, you've got regulation and governance. Then, there's data quality and privacy. After that, legacy technology. Then, of course, cybersecurity and fraud. And finally, the really human elements, talent and trust. First up, regulation. And this one is a really big one. Regulators like the RBI, they need a clear audit trail. They need a step-by-step record that shows exactly how a decision was made. A bank can't just say, oh, the algorithm decided. No way. There has to be a clear, understandable reason for absolutely every action. I mean, just think about it this way. If an AI model denies you a loan, the bank has to be able to explain exactly why, in simple terms you can understand. And that's why these so-called black box models, the ones where even the people who made them don't know the exact logic, well, they're a total non-starter in finance. Okay, barrier number 2 is all about the data. And AI is only ever as good as the data you train it on. And in India, a lot of financial data is, well, it's fragmented, it's messy, it's stuck in different silos. Trying to build a reliable and, importantly, an unbiased AI for something as critical as deciding who gets a loan, if you're using bad data, that's just a recipe for disaster.
Barrier number 3, legacy tech. So many of our banks are still running on core systems that were built decades ago. Now, trying to plug modern AI into those old systems is tough, but ripping them out and replacing them, that's not just extremely expensive, it's also incredibly risky. It's like trying to do a heart transplant on a person while they're running a marathon. So a lot of banks just add small things around the edges, like chatbots, that don't touch that critical core.
Next up, cybersecurity. Look, every new piece of technology creates new ways for bad actors to attack. And with Indian banks already dealing with thousands and thousands of online fraud cases, you can imagine that the people on the board are pretty cautious. They have to be absolutely sure that any new AI system isn't going to just open the floodgates to even more sophisticated threats.
And the final barrier, this one's all about people. On one hand, you have these machine learning experts who are building these incredibly complex models. And on the other, you have board members and regulators who need to understand and, crucially, trust those models. Bridging that huge gap in understanding and trust is a massive challenge that often gets overlooked.
So, we've talked a lot about the challenges, but hey, it's not all doom and gloom. Let's shift gears and look at the bright spots. Those small wins that are sending some pretty big signals about what the future could look like. These are the quiet experiments that are slowly but surely building the case for AI in finance.
For instance, using machine learning for fraud detection is already saving banks a ton of money. It works. Those UPI pilots we mentioned, they're proving that you can automate customer interactions safely. And in a lot of banks, AI is genuinely improving customer service and even giving them early warnings on financial risks. These are real, tangible wins that are building confidence in the tech.
So, what's the path forward then? What's it going to take to get from these small wins to a full-on mass implementation of AI? Let's look at 3 key developments that could really unlock the future of AI in Indian finance. The first unlock is something called a regulatory sandbox. Basically, it's a safe space, a controlled environment created by regulators where banks and fintechs can test out new AI products with real customers, but under very strict supervision. It's a way to innovate and learn without risking the whole system. The second unlock is data. We need to build a shared, trusted infrastructure. Think of secure platforms where high-quality anonymized data can be pooled together to train better, smarter AI models, all without compromising anyone's privacy. India's digital public infrastructure, things like Aadhaar and UPI, they're a great start, but we need to build on that foundation.
And the third and final piece of this puzzle is explainable AI. This is huge. It means building models that don't just spit out an answer, but can also provide a clear, human-readable reason for why they came to that conclusion. If you can combine that with clear standards for auditing these models, you solve a massive part of the trust and regulation problem we talked about.
And let's be clear, the stakes here are enormous. If we get this right, the gains are incredible. Faster credit for small businesses, way better fraud protection for everyone, cheaper financial services. But if this is rushed, the risks are just as scary. Biased credit denials, automated errors that spiral out of control, and even the risk of a single bad model causing a domino effect across the whole system. So ultimately, the challenge for India isn't really a technical one. The question isn't, can we build it? Of course we can. The real question is, can we build it right? Can we innovate in a way that is safe, that is accountable, and that is fair for every single person? That's the question that regulators and banks are wrestling with every single day.
So where does all this leave us? Well, progress is probably going to be steady and cautious, but it's also going to be meaningful. And I want to leave you with this question. As we move into this future, what part of this worries you the most? Is it the risk of biased algorithms making unfair decisions? Is it the threat to your own data security? Or is it the idea of an AI making a huge decision about your finances without anyone being able to explain why? I'd love to know what you think.